Healthcare stocks taking a hit this year, with big pharma, device makers, even insurers feeling the pain. But is there a case for revival? Our team took a deep dive into the trend and the potential buying opportunities in the sector. Ben, what is it that's dragging healthcare stocks down?
What's amazing about it is it came into the year and everybody was saying this is a sector to look at. It had been beaten up and they said it's time to buy. And you know what? All it's done is get beaten up more. It's underperforming the S&P 500 by about 10 percentage points. And it's just about everything. I mean, we have insurers that are getting hit by skyrocketing reimbursement costs and also changes to Medicare and Medicaid that's really putting pressure on them. You have the healthcare, the pharma companies are being hurt by drug price pressure from President Trump. You have possible tariffs there. And then you have the obesity stocks just aren't working. And so you add it all up, and it's just a sector that's in a really bad place.
You know, it's interesting. You mentioned the Trump and the White House issues. I think actually Trump's kind of taking a page from Biden's playbook. I mean, he did also recently sit there and send those letters to about 17 pharma companies, basically demanding that they lower prescription drug prices. I think that this is going to continue. And of course, this may be good for consumers and patients, maybe not so good for margins.
Okay, do you think this sell-off is a buying opportunity here for investors?
I think it is. I mean, it just keeps getting cheaper relative to the S&P 500. And the contrarian in me likes to look at things that are beaten up and out of favor and have a history of decent growth and think that there is an opportunity here. The valuation is as low as it's been in about 5 years. And so I think that the sector at some point will have to bounce. But again, I thought that at the beginning of the year.
Megan, is there a part of healthcare you like?
I do, actually. I think that device companies and the sort of that med tech field is a little bit more of a safer bet. There's been a couple of companies that have actually been performing, really well year to date. And, those are some of the big names like Abbott. We all know Abbott. Obviously, its med tech unit has been just doing really gangbuster, very good pick for this point. But also you have things like Stryker. Now, these guys are known for, a lot of their hip and knee replacements. And this is kind of the reason I like med tech is that there's a lot of, we'll call them older folks in this country that will be using a lot of...
I'll take two of everything.
Exactly, right? You need two of everything. It's a match set. But it was one of those situations where, these kind of innovations are going to continue to pay dividends. I also like iRhythm. I know this is not a household name, but this is an interesting one. They do a lot of cardiac monitoring, and Citi has really liked this company for a long time. They've been a buy. It is one of those situations where there have been some operational moves that have also been very helpful. It's a good, interesting play.
Johnson & Johnson is one of those device companies that's suddenly outperforming this year. I usually consider this company too big to ignore and too dull to dwell on. But I spoke with the CFO this past week. He says the company has entered a new era of growth. The consumer products are gone, the Band-Aids, the Neutrogena, and the drugs and devices are gaining revenue. There's a dividend of just over 3%. I wrote in Barron's this past week that it's looking borderline pre-interesting. So
why'd they get rid of Neutrogena?
I guess that's not where the growth is. Al, is there a part of healthcare that appeals to you?
Picking up on Ben's contrarian calls, I found three stocks: Intuitive Surgical, robots for microsurgery, Cooper. They make your contact lenses, and good old Danaher. They make tools for life sciences companies. All three had some similarities. They're all cheaper than they used to be over the past year. They have increasing support on Wall Street from analysts upgrading the stocks or taking their price targets up, and they all have strong support with analysts. So those are three worth a look. The only thing I would say is that, I didn't spend a lot of time talking about the businesses. I'm doing a screen. Whenever you do a screen, it's a start. Then you have to sort of understand what you're buying. Don't buy contacts because I said Cooper.
Understand what you're buying. Write that down for me. All right, Ben, what do you like in healthcare?
Well, I have trouble understanding all these biotech stocks, what they do and how they do it. But I'm looking at a couple that have done actually quite well despite the weakness in the sector. One is a company called Incyte. It has a drug called Jacfil, which is for blood cancer. It had earnings at the end of July, and those earnings were great. It's up 14%, actually outperforming the S&P 500. Doing even better is Gilead. This is a stock that I have watched for a long time. They actually cured hepatitis C. How often do you hear about a company curing something? No, they just come up with treatments that you have to use over and over again. But because they cured it and because there was competition, there were complaints about costs, the stock has been basically going nowhere since 2015 or 16. But it's finally rallying back up to those highs. It's up 30% this year. If it breaks out from there, it has a great business in HIV drugs. I think the stock has a lot more room to run.
Let's circle back to Lilly. That stock got hit this past week. They said in the trials, we've got a pill that can help you lose 12% of your body weight. That sounds like good news. but it's not as effective as the shots, right? The shots help you lose more weight. So investors, I guess, were expecting better. They took the stock down. Has that stock become a good deal? There's certainly, it's beating up on Novo Nordisk's medicines. Is it more growth ahead?
No, I think there may be more growth ahead, but the stock is expensive. It trades around 25 times its earnings. You look at something like Pfizer. Pfizer is at 7. The healthcare sector is around 16. And so you need a lot of things to go right if you're going to keep going up like Lilly was. And I think that there's just a little too much competition and a little too much worry about the growth to have it keep going.
Okay,